Hey guys, welcome back to Beyond Travel Check-ins with Saida.
And sometimes Jermaine.
So today we are talking about day trading. I think we should start the video by saying we're not day traders, right, babe? Okay, what kind of traders would you say we are? Explain to people what kind of traders we are.
Investor / and me, I'm a / swing trader.
Yeah, but for the most part, we're investors, and the difference, I guess, is just that whether you're looking for a more short-term, quicker gain versus a more, I guess, strategic, longer-term gain.
Right. To me, right, if you're a swing trader and you go up to a year, that's like investing.
So one of the reasons why we don't day trade, and I guess the number one reason why is because day trading can make you broke.
Man, we tried it for a little while.
We did.
And Margaret slapped me all in the face.
It was a costly experience.
Yeah, and I don't. but I'll go ahead and let you leave with that. Yeah, it can be costly.
No, day trading can be a costly experience. And during the time when we were day trading, we were reading things that were saying, okay, the cost of the money that you lose when trading is like the cost of your tuition. Like, people love to say that it's the cost of your tuition, right?
Yes, I believe that to a point.
But I believed it too far and too long. And you know what?
Yeah, me too.
When I look back on my experience as being an investor, because I've been in the stock market since I've been 17. So my experience with being an investor, I didn't have to pay a cost of tuition as an investor. And my account always made money when I was an investor. But all of these new strategies started coming out, and it was talking about day trading and all of these different things. And so it just seemed like when you have YouTube now, because when I was 17, there was no YouTube.
Right.
So now you have YouTube, and you have all these people hollering about, oh, you could be a day trader. And I think you do have some profitable day traders. However, according to research and statistics, only 10% of the people are profitable who day trade.
Right. Now, people do make money with it, right? But you got to know what you're doing. Even the guys on YouTube, right? They'll tell you I blew about 3 accounts. And I don't know how much money that is. But how many people out here want to blow 3 accounts before you think you got it right?
And what if you don't have 3 accounts worth of money?
And I don't think they're talking about $500 accounts either.
People are losing $5,000, $10,000, $20,000, $30,000, $40,000 trying to learn how to day trade. Some people are taking out loans. So the number one truth that we want to point out today is that only 10% of the people who day trade are profitable.
You say take out loans?
Yeah, margins.
Oh, well, margins. If you take out margins, you better know what you're doing already.
But Jermaine, I know I've spoken to people who have taken out margins to trade.
And don't know what they're doing. Losing.
I think people think they know what they're doing.
You're going to lose a trade here and there if you know what you're doing, but they're crying. If they crying, they losing. They crying, they've been losing. Because if you profitable, you ain't going to cry about the loss.
One thing Jermaine doesn't do is he doesn't go into forums, and he don't like read through these comments. I've read through comments, and these forums is crazy. Like, you ask people, if you go online and you ask people like if they're profitable and how long they have been trading, there's a lot of threads about this. And people actually share, I've been trading this amount of time, I'm not yet profitable. This is how much I put in, this is how much I've lost. Like, so if you don't believe what I'm saying, like, you can check for yourself. But this is one of the reasons why I'm not a day trader, because like, why am I going to invest in something where there's only a 10% profitability margin?
Well, I used to go in the threads, but man, it's depressing. And people be lying, and then they,
when the stock go down, that's when it's time to read. When the stock go down, right?
Right. Well, I've been looking there, and they were like, "Oh, to the moon." I was like, okay, this ain't Doge or none of this. Like, you hoping and wishing, because I don't see the moon. And even some things I had my money in, I was like, this don't look like the moon.
No.
This look like Sheol.
Right. So another truth about trading, especially, and we're talking about day trading, we're talking about the quick, fast trading, right? Is that it can become addictive. So one thing you have to know when you're going into trading is you have to know your personality. And I don't think either Jermaine and I have an addictive personality. I never felt like I was addicted to trading. I never felt like I had to get up and trade.
Right.
But some people do have addictive personalities, and they will take out loans or what's called margins in your brokerage account. You can actually take a loan from the brokerage company to invest in the market, to trade. And so what makes day trading addictive, do you think?
It's quick money.
Well, that is true.
And that's one of the most dangerous things that can happen. You day trade and you actually succeed on your first couple of trades, right? You can't really tell anything about it. It just feels good.
Yeah.
Because
Adrenaline.
right, because that happened to me when I tried it, right? You're not gonna keep doing stuff you losing all the time. So first couple trades, oh man, this ain't
nothing. I could do this forever, right? Yeah.
like, wait a minute. No, yes.
And so the other part is like, okay, so let's say for some instance, and this is the flip side, somebody goes in, they get these wins, they get these quick wins, right? And so what do they do next trade after they get a few quick wins? Then what do they do on these next trades?
Sometimes they double up.
Size up.
Yeah.
And so now the profit you made, you say, you know what? This is the fourth time I'm gonna duplicate this. And then you put your profits in, you put the other money you had in.
Right.
And then what happens?
It's gone.
Disappear into thin air, poof.
Yeah, well, it's not thin air. Somebody's getting it. Somebody on the other side of that bike. That's the thing about when you lose a trade, usually somebody else is winning the trade.
Listen.
So yeah.
Let me tell you a quote we heard the other day. Sometimes you're the biggest thief to your own pocket.
Yeah.
And basically, yeah, you done made this money. Now you didn't size appropriately. What you did is you say, you know what? If I won this time, now let me put in a big amount. It's called like risk management too, right?
One thing I realized, because if you don't know what you're doing, you can't risk manage it because you don't know what you're doing. You don't know how much you're risking, and you don't know how much you don't know.
Yes.
Right. So that's one thing we had to learn to make sure on the other option things that we do.
Yes.
Manage your risk.
Right.
I'm gonna be honest with you. If you are just starting out, right? If you're a day trader and you don't even know how to use something like a Fibonacci, I know I'm going to be speaking. If I'm speaking a different language to you, that means you should not be doing it, just to be honest with you. If you don't know how to do something simple as a Fibonacci, you should leave that alone.
Yeah, absolutely. Because day trading requires you to know how to read charts.
Your technical analysis has to be on point, really.
Whereas investing is more about understanding the business and what their business goals are and their profitability.
Right, and some
long-term trends.
Right.
So it's different than trying to look at daily and weekly trends
versus 5 minutes.
Yes.
And 1 minute, 15
or
minutes.
Looking at like a 5-year trend of a company.
Yeah.
It's just different. So it's two different strategies. And so when people lose that money in a day trade, now it becomes addictive because now they want to try to gain that money back, which we call revenge trading.
Right.
So sometimes people lose the money and then they feel like the market took the money from them. And so now they try to put more to win it back. And then they lose again, man.
Well, the market did take it. And it'll take some more.
Ain't no end.
And there's no end. The end is going to be the end of your money.
It's no end until you have no more money.
Again, some people are successful.
10%.
Yes. So if you one of the 10%, man,
More
kudos
power
to you.
to you,
You're
man.
better than I am because I couldn't do it, to be honest with you.
No.
So, but the other 90, you better realize that you're the 90.
Right. You have to know whether you're in the 10% or the 90. And you can't let a few wins make you think you're in the 10%. You have to remember what the odds are. And that leads to my next point. One of the things these like day traders that do these videos don't tell you is how stressful it can be. Like,
yeah, especially if you don't know how to risk manage.
Right. When you see your money dwindling, because let me tell you something. You can look at the aftermarket. Like you could have made your move in the market, thought you were making the right move, and then you can realize that your contract that you bought done went down 80%. So you done already lost 80% and you can't do anything about it till the next day.
Nothing.
And then you're thinking to yourself, what are you even going to do about it the next day? Are you going to take this 80% loss, or you say I'm going to just ride it into the dirt? It's going to either take 100% or I'm going to win it back.
I've been there, and sometimes it went straight in the dirt. So sometimes it came back, but I'll be honest with you, it's most likely going in the dirt.
If it goes down 60%,
it's going down 60,
50%, 80%, it's
well, yeah, but see, but when you're talking about overnight, now you're swinging. You're not day trading anymore. But swing, to be honest with you, when you swing just over one night and you day trader, and you a day trader, that you messed up already. If you got to go overnight.
You mixing too many strategies.
Yeah,
you
that don't
know
mix.
If you're a day trader or a swing trader.
Right.
And so, like Jermaine said, like some of this may sound foreign, but if it sounds foreign, then maybe day trading is not something that you're ready to get into if you don't even know these terminologies. And what sparked this video was a question from a viewer who wanted to know, should they get into day trading?
Oh yeah?
Yes.
I didn't even know that.
Wanted to know, should they get into day trading? Should they buy into one of these programs? And like Jermaine and I, we'll tell you, we bought into a program, stayed in the program for like 2 years.
A year.
And it was a year? Okay, we wasn't that crazy. We stayed 24 months.
Right, we should have done what we was doing it on our own because we had enough knowledge about the other stuff.
We were actually better investors than when we got into these programs.
Right.
We had some wins here and there. But looking back, that was probably one of the dumbest things we could have did with our resources.
That's because, some of the stuff is the verbiage, right?
Yes.
I realized, okay, just because you option trade, you were right earlier, that still is an investment, right? If you know what you're doing, you got enough time on your options, like some investments are riskier than others.
Right.
But that doesn't equate to day trading all the time.
No.
Like you need options. Well, you don't need options to day trade. You can do it on stock too. But this is the thing. If you haven't been in the market over, I would say 2 years, you're either at a loss at this point, or you're gonna lose. Period. Like this is what I mean. Okay, just because you at a loss don't mean you're gonna be a loser over the long haul.
Yes.
Right. Once you start getting over 2-3 years, you know who you are.
Right.
You know
you should.
Right. You should know. Okay, I know what I'm doing now, or I don't know what I'm doing.
Yes.
Because if you still making the same mistakes you made 2 years ago, you know what? You're gonna be out anyway. You're gonna be a 5-year loser.
No.
Right.
No.
If you get to 5 years, you're still in the market. Usually, you're profitable.
Yeah.
In a day trade market.
Right.
Right.
So day trading can be stressful because there's such a short time frame on it. Like if you buy a 0 DTE, 0 DTE means that there's 0 days until the expiration of that contract, which means your trade has to either go up or go down, whether you're doing a call or a put within that same day, and not even the whole day, in the first couple of hours of the day. Then when you start going out further, like 1 DTE, 7 DTEs, whatever, right? You have such a short time frame for that price movement to happen.
Yeah.
So you really have to be sharp about being able to anticipate what this particular thing is going to do.
Yeah, you're more risky than I am. Even those 0 DTs have you shook. That's what they say. Now, if it goes up fast. But it goes down, it's just like a rock.
You ever heard of a term, you had wet eyeballs? I done been in the market, when we back home, me and Jermaine being there, we be in our office, we're trading or whatever the case may be. I get into the trade, it don't go the way I wanted it to go. This is when I'm talking about the stress. I tell him, then he want to talk to me. I'm like, I don't want to talk right now. I got wet eyeballs. I'm just trying to blink back my tears. So I don't like that kind of trading. Like prior to getting into these trading groups, because the question was, the person wanted to know, should they buy into this trading group? Should they pay $1,200 for this course? I can't tell you what you should do, but I'm telling you my personal experience. And if I had to add it up, we probably paid $1,200 for the 12 months we was in there.
And losses, you mean?
And we was paying. We lost money in that group. And I was making money prior to going into that group.
That's the crazy thing. We were crazy.
You see these people on YouTube, and it makes you want to switch your strategy that's already working. But what I'm telling you guys is take your time, learn about investing, learn the terminology, learn what it's all about. The number 4 truth that like these day traders may not tell you, who maybe are trying to sell you a course or to sell you this or that, right, is that Jermaine and I are Christians, right? So we are going to be coming from a different lens. And our lens is from a biblical lens. And so when we're talking about from a biblical lens, the Bible talks about quick and risky gains, right? So I'll tell you guys, there's no shortcut to wealth. Like Jermaine and I have been building up our finances and building up how to be a good stewards and how to manage our finances for years now. Like, and our financial strategies have included a plethora of things. It includes our tithing. It includes our offering. It includes what we invest in. And one thing I tell you, there's no shortcut to wealth. But there is a elevator down to poverty.
Yeah.
And it go down fast.
Yeah, it's a short elevator. Don't even worry about it.
Like, ain't no elevator that's going to zoom you up to wealth.
It's not. I mean, that's going to it'll take a while. Well, the bigger your shovel is, if you got a big shovel, you can get there quicker. But if you don't, just easily work your way up.
Can you go to Proverbs 28 and 22?
You want the KJV still?
Yes.
22. He that hastens to be rich hath an evil eye.
Why'd you laugh?
Well, yeah, I wasn't expecting to say evil eye, but yeah, I get
You
it.
wasn't expecting that?
Yeah, basically greedy.
Yes, that's exactly what it means. It's like, you like, man, I can't wait to get to this bag.
I wasn't finished though.
Oh, go ahead.
It said, and considereth not that poverty shall come upon him.
Wow.
Yeah.
Wow.
Yeah.
That don't even need no explanation. But what does that mean?
You're gonna be broke.
Right.
Yeah, you know one thing about the market is that,
I have one more.
oh.
Proverbs 21 and 5. I just have one more. Because I just want to give the scriptures that substantiate like what our beliefs are about finances. 21 and 5.
The thoughts of the diligent tend only to be plenteous, but everyone that is hasty only to want.
Right. So if you're diligent in your thoughts, meaning you do your due diligence about the market, you're more apt to have prosperity and be plenteous. But if you hasty, it says you're going to want. That means you're going to be in need. You're going to have lack. So take your time. Don't try to take a shortcut to trading, guys. There's no shortcut to trading. There's no shortcut. I said I started trading when I was 7. Not trading. I wasn't a trader. I started investing when I was 17. When did you start investing?
I don't remember.
Around what age, if you had to guess?
Man, I would be guessing a lie because I have no idea.
Was it 19?
No.
I guess, what was your first experience? Was it your first job?
Not first, but yeah, I was probably like 24, 25.
Okay, so at your job, 401k, right? Something like that? Guys, and I'm 48 now, and he's 51.
Yeah.
So you have to understand, it takes time to really learn the market. And then lastly, I guess that piggybacks on what I was just saying, is it requires commitment, right? Because how long have you been studying the market?
Studying, I haven't been studying, but looking at the market, it's been a while, right? It's been
when you
some
say
years.
looking versus studying, what you talking about? You just open up your desktop and look at it?
No, for the past 2 or 3 years, right? I've been diligently looking at the market, looking at trends, looking at the chart, right? Technical analysis, looking at the financial reports of companies. Before I wasn't doing that.
That sounds like studying to me, guys.
Yeah, before I was just doing what everybody else did. I look at the news. As soon as they say the market goes down, you jittery, want to get out the market, those kind of things. But now, you know, when the market goes down, it's an opportunity, because the market ever goes all the way down, especially in America, the market's the last thing you got to worry about, because you're going to have more problems.
Right.
So, yeah.
So yeah, you gotta be like serious, and it takes a serious commitment. Like some people, and it's different types of investors, right? Because you can just put your money in your 401k, right? And you got your company managing it for you for the most part,
right?
Or whatever. Now that doesn't mean that it's gonna be all good, because I know they have their, if you guys want to know, look at some of the statistics of some of these portfolio managers. Like when you start doing your research, you'll realize that you can probably do a better job than some of these portfolio managers.
Yeah.
But I mean, the safe thing is people just invest at their job. They say, okay, take a certain amount of percentage out of my paycheck and put it into a 401k.
Right.
But if you would commit to learning at least the basics about the stock market and what investing is all about, then that would even equip you to make better decisions with even the choices in your own 401k or your portfolio,
right,
sort of thing.
Right. So
Yeah. So guys, we thank you so much for watching this video. We hope you found the video informative. Let us know down in the comment section what part really resonated with you. If any questions have popped up in your mind as a result of this video, let us know. We can come back and we can do a video on that. Or if you had a question about something we said in the video and you want some clarification, you can ask us down in the comment section. Thank you so much for watching, guys, and we will catch you in the next video.
Bye.